The Morgan Report with David Morgan.
David Morgan with you with the weekly perspective for the week ending 15 November 2019. Well, the general stock market in the United States is clearly in an uptrend. Stocks and several indices hit new records. Healthcare, communications, the industrials, and technology. Internet stocks were quite strong as well, leading the XLC ETF higher. And even the healthcare insurers and healthcare spiders hit a new record. So looking at the industrials, it's cleared formation and is higher, which means there's no upside resistance. So I do expect to see this market continue its upward move. I don't know how much longer, but I have to be very clear that stock market's certainly doing well at the present time. Gold market, my comment there is it's still searching for a bottom. I forecast I'd see $14.50, which we've gotten within $5 on the U.S. markets. Will that level hold or not? It's too early to determine it, but I will, of course, be doing an update for our members as I see more data. First article up is from Reuters. Moodys cuts global sovereign rating outlook to negative for 2020. And out of London, of course, Reuters ratings agency Moodys cut its global sovereign outlook to 2020 from stable on Monday, saying disruptive and unpredictable world politics would slow growth and increase the risk of economic or financial shocks. So let's blame the politicians. Not that they don't need some, they certainly do. But politics does not have as much to do with economics as some believe. It certainly has a part. And with the trade war going on, etc., that's true, but it's not as influential as it sounds. The reason being is that, as I say every week, the global economy is contracting regardless of the trade war or not. It's sort of a buffer for the propaganda press to make it look bad or slant it one way or the other. And I'm not really advocating that it isn't there, but I think there's more written about it than really merits careful analysis. So let's move on. Another quick one from Reuters. WeWork losses widen to $1.25 billion amid record office expansion. On Wednesday, the net losses of the third quarter more than doubled to $1.25 billion as the money-losing shared office operator added a record number of desks to its global network, but was unable to control rising costs. WeWork opened 97 new sites in the quarter ended September 30th. This is just a case of expanding too quickly, not using good judgment. You wonder what the business acumen is when they do something like this, but you look at Uber and how much money they've lost, and some of these other companies that have really no merit as far as true output or productive capacity to the citizenry at large. And I'm talking about the global citizenry. I mean, Facebook comes to mind, even though I'm sure there's some out there that love it. And there's nothing wrong with social media. I mean, I'm free market, do what you will. But as far as what it contributes to the actual benefit of humanity, I'd say very little on the aggregate. And as always, it's hard to do a weekly update and not include this website, Hedge. Global supply chains imploding as quarter of German firms plan to leave China. Well, this is, is this a trade war or not? Maybe. I don't want to go into the politics. I just want to go to the facts. And the facts are, as I've said week after week, the Business Confidence Survey of 2019-20, published by the German Chamber of Commerce in China in cooperation with KPMG, one of the big seven, in Germany, finds that almost a quarter of German companies operating in China are preparing to relocate. The survey was conducted from late July through mid-September and had 526 member companies out of 2,300 respond. Of the 526 member companies, 23% of the respondents said that their factories will be transferred out of China. This is a contraction. This is going back to the nation-state status. This is anti-globalism. This is a lot of things. There's a lot to be read into this. I suggest you read the article. A lot of graphs that make the point that I just stated. It's not much more to read, but again, the overall theme continues. And this is from the Independent, not known to be a huge circulation, but certainly is part of the press. Bitcoin hailed as success by China in dramatic shift in attitude. A state-run newspaper in China has published a front-page story hailing Bitcoin as the first successful application of blockchain technology. Well, I don't think too many people could argue with that. The praise marks a significant shift in Beijing's stance toward the cryptocurrency and comes as the country prepares to launch its own digital currency. Monday's edition of Xinhua went into detail about how Bitcoin and its underlying blockchain technology works, describing it as, quote, one of the hottest topics in recent years, end quote. China has been slow to acknowledge the potential benefits of cryptocurrency compared to other countries and has typically taken a hardline attitude toward the industry. So you can read this further. Obviously, pro-Bitcoin. Some of these countries kind of go back and forth, a little bit wishy-washy, but blockchain's here to stay. There is absolutely no doubt about it. What nation states are clear to adopt it and what they'll do with it is also a little bit difficult to determine, but if you go back to one of my original articles for the public, my 2 bits about Bitcoin, I clearly state in there that if it becomes too popular, governments will basically seize control of it. I didn't use quite those harsh words, but I certainly did imply that. So the final outcome of the blockchain remains to be determined, but as I said, it is here to stay. And a site I frequent since I've been writing the energy letter for almost a year now. The Energy Information Administration is grossly overestimating U.S. shale. This is from Nick Cunningham. There's also an article by my friend SRS Rocco, Steve St. Angelo, as well. And what I've looked at on the fracking and studied is very similar. I mean, this thing is way overblown. It really doesn't it adds to productive capacity. There's no doubt about that. But it's a short-lived, money-losing proposition across the board. There's very few companies that actually eke out a profit. They're almost all losers. The prevailing wisdom that sees explosive and long-term potential for the U.S. shale may rest on some faulty and overly optimistic assumptions, according to a new report. Well, this one is new, maybe, but there's been several of us saying this for quite some time. Forecasts from the U.S. Energy Information Administration, along with those from its Paris-based counterpart, the International Energy Agency, also often cited as the gold standard for energy outlooks. Business and governments often refer to these forecasts for long-term investments and policy planning. In that context, it is important to know if the figures are accurate to the extent that anyone can accurately forecast precise figures decades into the future. A new report from the Post-Carbon Institute asserts that the EIA's reference case for production forecasts to 2050 are extremely optimistic for the most part and therefore highly unlikely to be realized. Enough said. It's not going to last much longer. How much is that, David? I don't know, 10 years? It really is not a big contributor. It's very disruptive in many ways. I am not pro-shale, if you couldn't tell. But it does temporarily, from how much production is made, look good. As far as being a capitalistic system where you're doing it for profit, think again. It doesn't really happen in hardly any cases at all. Now, moving on to metals. This one's from Bloomberg. Gold trade equals to 3 million ounces sends futures tumbling. Gold futures tumbled on a 3-month low as contracts equal to over 3 million ounces changed hands in half an hour, fueling the sell-off. In 30 minutes ended 10:30 a.m. in New York, 33,596 contracts were traded, more than triple the 100-day average for that time of day. That helped push the most active contract to a low of 1,448.90 an ounce, the lowest since August 5th. The sharp violet move lower suggests stops of or a liquidation, Tai Wong, the head of metals derivatives trading at BMO Capital Markets, said. On Friday, the Commodities Futures Trading Commission released data showing hedge funds boosting their bets on gold's decline by 15% to 31,111. Futures and options in a week ended November 5th, the highest since early June. We've been forecasting lower prices in the near term for quite some time. In fact, believe it or not, I did call pretty much the day to get out on a trading position. Long-term investors, of course, should buy and hold a core position. So that's going to wrap it up. The only thing else to add on the metals is what's on our website. If you're new and you haven't seen this, or you listen to this weekly update and you haven't yet watched this innovation in electronic waste that's on the front page of the Morgan Report, just go to morganreport.com. When you invest in a small, innovative technology stock, not only will be known as a visionary stock investor, this one company could help your retirement, your savings, and your wealth, because you'll be investing in one of the best speculative discoveries I've seen in the past 40 or 50 years. It's a major breakthrough in clean technology and something desperately needed by the mining sector. So it is being tested by some very significant names in the mining industry, but most of them have sold non-disclosure agreements, so I can't say more, although one will be reported in the Morgan Report and is in the public domain. And it's a fairly significant company as a producer. I'd say it's more than a junior producer, moving toward, let's say, the mid-tier sector. But anyway, that's it for this week. I will be back with you next week. And remember, there's nothing more powerful than the truth, and the truth usually works its way out sooner or later. Hope you're all healthy and doing well. I will be back again, as I said, next week. Hello, I'm David Morgan, publisher of the Morgan Report, and as some of you may already know, the Morgan Report is about money, metals, and mining. In fact, we cover all resources, from rare earth elements to precious metals. I've been publishing on the internet for about 20 years. My primary passion is to help people build and preserve their wealth. I love to make people millionaires. I've helped thousands of people via our research in the Morgan Report, which has thousands of paid members and 10 times that amount on our free weekly updates. Here's what you'll receive from our free newsletter: to-the-point webinars, weekly analysis of the financial markets, interviews and our conference schedule, special reports such as riches and resources, and various metals price forecasts. Our paid service client base is primarily small to medium-sized business owners, professionals in the industry, or the seasoned investor who understands markets and the value of precious metals. My area of expertise includes equity analysis throughout the resource sector, energy metals, base metals. We cover startups to billion-dollar corporations. We focus on a special sector that makes money regardless of price oscillations, and the importance of precious metals due to the ongoing currency devaluations. Our team of 3 analysts and support staff can help you build and protect your wealth. It's important for you to know what other people have said. We're passionate about what we do. High integrity and trust. Tell the truth and own it. If we're wrong, we admit it. Take a long-term outlook with major assets, and bet a little to win a lot with speculative situations. If you choose to become a client, you will gain financial insights very few, even professionals, recognize. You'll understand the importance of honesty in our financial system. You'll understand how the money system influences almost everything in your life. You'll be prepared for the ongoing currency crisis. And finally, I've chosen to make my life's mission greater than the individual, which means my mission statement is to teach and empower people to understand the benefits of an honest monetary and financial system. It's been a great journey so far, and the best gains in the sector lie ahead over the next 3 to 5 years. I'm fortunate to have earned the status of being a leading authority in my field in helping others protect their wealth. You can email me at support@themorganreport.com or call my office at 480-325-0230.